Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi along with my co-hosts, Emily Parker, CoinDesk's Executive Director of Global Content, and the TIE Director of Content, Lawrence Lewitton. Good morning to you both.
Good morning.
Good morning.
All right, let's take a look at what's happening in the markets this morning, starting with Bitcoin. The Bitcoin price XVX index is currently at 29,782, down over 1% this morning, of course, dipping below that 30K line. Bitcoin's been at $30,000 for a while. It's the first time we've seen $29,000 in at least a few weeks. Let's take a look at Ether. The CoinDesk Ether price ETX index is following suit at 1,891, dipping below that $1,900 line, down just over 1% this morning. And DeFi assets, the DFX CoinDesk's DeFi index is at 124, up almost 1%. DeFi doing a little better than Bitcoin and Ether this morning.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Ripple's partial court win against the SEC could be positive for Coinbase's stock, according to our next guest, Needham Company Senior Research Analyst John Todaro. Welcome, John. Let's get right into this here. I feel like I can guess why you think this would be good for Coinbase's stock, because, ostensibly this is a sign of regulatory clarity, and, this is seen by some people as like a positive ruling. But I mean, it is a partial ruling, right? It's a partial victory. There's a lot of mixed opinions in the crypto community. Some people saying that this is just as confusing as anything else, and it doesn't really bring regulatory clarity. And B, it's not even that good. Like, this might not even go that well. So why, given all those concerns, do you still see this as positive for Coinbase?
Yeah, sure. So I think it removes the major concern, which was Coinbase could lose 30% plus of its revenue because it was going to have to delist most altcoins. This ruling looks like that might not be the case. And in fact, Coinbase has come out and relisted XRP. So if anything, Coinbase is viewing it as, okay, we should go out and list other assets versus we need to go out and delist a ton of assets. So I think it does kind of remove some of those concerns that along the way, Coinbase might have to delist a lot of assets, which is going to be a big deterrent to their exchange business, which is where they get most of their revenue from. So I do think the ruling is positive from that standpoint, and it does give institutional investors a little bit more clarity in how this can play out. And now you can start digging into Coinbase's fundamentals a bit more versus the stock only moving just on regulatory concerns or positive regulatory announcements.
Well, I guess, part of the issue is that it's still just one court, right? So ostensibly this could be pushed back. So it's not totally a done deal. But I guess my other question, which is slightly different, is just this is generally expected to go on for years, this Coinbase battle. And I'm just confused about where Coinbase is getting this war chest from. Coinbase hasn't been doing that well. It wasn't making money off transaction fees. So where are they getting these millions and millions of dollars to sustain this long battle with the SEC? I just honestly, just on an economic level, I don't totally understand where this money is coming from and how this could possibly be good for their stock, when A, they're so distracted by this, but B, they're just spending so much money on legal fees.
Well, they still have billions in cash on the balance sheet, so they do still have a somewhat padded balance sheet. But this is a fight they have to do, right? So if Coinbase says, you know what, we're not going to put the $50, $100 million into the court battles, we're just going to go end our exchange business, I don't think that would be good for the stock either. So it's these regulatory issues obviously aren't great for the stock, but really kind of what's the alternative for Coinbase? All right. So this is a core part of their business that they need regulatory clarity on. And I'm sure Coinbase would love not only just regulatory clarity, but regulatory clarity that's in their direction, that's more favorable, saying you can continue to support all the crypto assets you have on the platform versus you have to delist a number of them.
Even before this partial win with XRP, Coinbase's stock was rising as they faced lawsuits from the SEC, as there was a lot of clarity missing on what was going to happen with these tokens that are listed in that lawsuit. And I must point out that murkiness still exists. Why do you think the stock was rising at that point before we got this partial ruling?
Yeah, so you obviously and I do want to be clear, you still have the regulatory uncertainty and you still have some regulatory concerns on the stock. As you both mentioned, this was one court case. It's certainly not a done deal. I think the stock was rising before that off the Bitcoin ETF applications. So a lot of them had Coinbase either as a custodian, they announced market surveillance agreements with Coinbase. So that it was a positive for Coinbase that these large institutional firms that were going to launch Bitcoin ETFs were relying and trusting Coinbase to some extent. So Coinbase certainly, I think on the back of that, looks like really the only kind of adult left in the room in crypto, so to speak, at the exchange level. FTX is obviously gone. There's kind of ongoing issues with Binance. So Coinbase is the de facto large remaining player. So I think from that, those applications saying, look, institutions are still interested in the space and Coinbase is a key integral part of the system, then I think that was a positive read through the stock. So I think some of that rise leading into this court case wasn't necessarily views on the court case. I think it was more so those Bitcoin ETF applications.
What's your current price target and rating on Coinbase?
So we're buy rated. We have a $120 price target. So we do think there's some regulatory clarity that is starting to pave the way for a way where the stock can work. You still need to get volumes back, right? July volumes are okay, but what I would say is Q2, which they're going to do Q2 earnings in a few weeks here, that should be expected to be very poor. In fact, volume should be the lowest for the quarter for Q2, that is, since Coinbase came out as a public company. So investors should certainly be aware that this quarter that's coming up, it's going to look like it's going to be a bad quarter, but a lot of that should be priced in the stock now. Volume numbers have been out there a while. There shouldn't be anything too unexpected in there. And now folks should start looking at, well, what's coming up next? And that you got the Bitcoin halving, which is historically coinciding with higher crypto prices. You have these ETF applications. You do have a little bit more of a positive view on regulation now. And you are starting to see that flow into volumes a little bit. As I mentioned, July volumes are looking better than June. So June could be kind of the bottom for that retail volume. But that being said, you do need retail volumes to come back for Coinbase stock to work.
Yeah, I mean, that's been kind of a problem for a while, right? I mean, we've sort of seen this hitting Coinbase's earnings for a while. And I feel like one of the things that a lot of people don't realize about Coinbase is how much of the revenue comes from USDC and interest on USDC. Like, that's kind of how they were making up for some of the shortfall. And I've mentioned this to a bunch of analysts and everyone's just like, oh, yeah, sure, that's cool. I see this as like a tad concerning just because, you know, to some degree, an investment in Coinbase is now an investment in USDC. And it's like, it's kind of all in one stable coin. It just, I don't know. It's based on, you know, it's sort of predicated on interest rates being where they are. And I mean, do you see this as potentially concerning at all?
Yeah, the fact that USDC market cap is kind of kept going lower is an issue. It's a little bit offset by higher rates. So rates keep rising, but the USDC market keeps bleeding lower. They need to get USDC market cap to stop bleeding lower. And to your point, yeah, you do have a risk where it's one stable coin. And there could be regulatory issues around stable coins as well. So if regulations come out that negatively impact USDC, that could be a big impact to Coinbase, sure. Now, on the flip side, if you do see rates start to get cut or start to get lowered here, they're going to take an interest income hit on USDC. But you would think maybe retail volumes would come back in a positive way. Bitcoin maybe start rallying quite a bit if you see a Fed policy shift. So in our view, I think they would more than make up for the loss on that interest income if there was a big Fed policy shift. And crypto likely would do pretty well off that, and you'd bring in a lot of those retail volumes. And at this point, Coinbase actually has a pretty large spread that they charge on retail clients. So if you do get retail volumes back, and if they keep that spread that they've had over the last quarter or so, they're going to do more revenue than they did before. If they did the same volumes they did in 21, say they do that in 24, they're going to have much more revenue because they now charge quite a bit more.
All right, John, we're going to have to leave it there. Thanks so much for joining us this morning.
Thank you. Of course. Thanks for having me.
That was Needham Company Senior Research Analyst John Todaro. Coming up, our next guest went from the baseball diamond to the world of Web3. We'll speak with Micah Johnson about what he's brewing after this short break. Good morning and welcome back to First Mover. Starbucks' Web3 loyalty program, Odyssey, is launching a new journey for its next digital collectible stamp in collaboration with NFT collection Aku. Joining us now is Aku creator and former MLB player Micah Johnson. Welcome to the show, Micah.
Hey, thanks for having me. You have to ditch the MLB thing after a while. It's like been 5 years. I think it's like
Never.
I'm too old.
We will
I'm
never.
getting too old
We'll
now.
never ditch it. All right. Today is when Aku Adventure launches. It's going to allow Odyssey members to embark on a mission with the NFT and collect stamps. Tell us more about it. How are you introducing people who go to Starbucks to the NFT collection?
Yeah, it's super cool. So, first of all, thanks for having me on today. But it's a super cool collaboration we did with Starbucks, brought to you by Forum 3 and that entire team who brought this together. It's a dream come true, really, to be able to participate in something like this with a brand as large as Starbucks. And our journey, we wanted to really embody Aku's spirit, empowering people to achieve their dreams, chase their dreams through education, empowerment, and encouragement. One of the coolest things about the journey is when people get to create their own rocket ship out of Starbucks cups, and there's been a few shared on Twitter already, and it's super cool, and it's crazy to see how creative people are. So it's a really cool journey.
What do you mean by making their own rocket ships out of Starbucks cups? Because I've done a lot of things with Starbucks cups, and none of them involve rocket ships.
Yeah, you got to check it out on Twitter. It's super cool. Part of the journey was to go to Starbucks, buy a cup, and turn it into a rocket ship. And so people are adding all kind of flair and pizzazz to it. And it's super cool to see the people tap into the creative side. I saw somebody said that they did it for like a date night. So Aku's helping bring people together through quality time and the love languages.
I hope you comp them for that date night. That's
there you go.
That she definitely deserves kind of flowers for that. That's kind of a all right.
It's nice, right? Quality time. One of the 5
shouldn't
love
take their
languages.
dates to Starbucks. I mean, spend a little more. I know they're expensive, but come on.
I love it. I love it.
Yeah, I mean, getting back to that, so kind of, just walk us through here how it works, the relationship with Starbucks, and the economics behind it.
Yeah, it was a bigger play than just the Odyssey. The Odyssey is just one part of it. The biggest initiative was I had this dream of distributing 5,000 backpacks to kids full of school supplies to kids in need this fall. And Starbucks raised their hand and wanted to participate and support that initiative. And so alongside the Odyssey journey and what we're doing in the Web3 side, there's a Web2 component, which is very near and dear to my heart, because I think everybody can relate to how extensive some of these back to school lists can be and how daunting it is to afford to pay for that entire list. So they've supported us financially in that endeavor as well as contributing to Blessings in a Backpack, and we'll be distributing those 5,000 backpacks to kids in August. And
where are the kids going to be located?
It's all over the country. So we've been working with Blessings in a Backpack, Baby to Baby, LeBron James Foundation, Chance the Rapper's Foundation, and a few others, Tiffany Haddish Foundation, Kelvin Beacham, to be distributing these backpacks in different events and different experiences across the country.
Just 5,000? You should push Starbucks for more.
Let's do it next year. I think CoinDesk can get involved next year too.
50,000.
This video clip as it.
For the price of one cup of coffee, you can get 50,000 backpacks.
I know where I'm coming next year. You guys got the big dreams.
Yeah.
Micah, I have to ask you, this whole project was inspired by your nephew. Now, you're talking about Blessings in a Backpack. What does it feel like to see some of these systemic issues that have, held people of color back from these grand positions be addressed because of your NFT project?
Well, I think for me, the most important part of life is this. I've been very blessed to achieve many great things in my life that have been selfish endeavors, playing in the major leagues, having my art shown in different places. Those are all selfish endeavors. And nothing feels better than actually doing good in the world. And so this initiative, although, it does nothing for maybe the Aku, anywhere from like the money side of things, what it does is it speaks to a mission. It speaks to our character, not just being a character that represents good, but a character that's actually doing good in the world. And I think that's a rare kind of combination. There might be very popular characters, but what character is actually making change in the world? And that's really all I care about at the end of the day. And I think that's what God's called me to do.
So, I mean, the kind of elephant in the room here is that NFT market's doing pretty poorly in general. People are getting laid off, NFTs just aren't selling, and just generally, there's just not nearly the kind of hype that there was. And I know a lot of people say like, oh, this is good because like the high quality projects are going to come through, et cetera, et cetera. But still, it's not a great situation, right, for NFTs. And I'm just curious, like, if that's affected your project at all, or just, how you see that atmosphere.
Yeah, 100% affected us as well. The financial situations of NFTs, as you said, is not as great as it once was. But at the same time, I never got into NFTs because of the floor prices or the price of anything or the revenue that was there. It was because I saw an opportunity to release IP, create new IP, and have ownership over the creative that I output into the world. And that hasn't changed. And you look at organizations like Starbucks who are continuing to build in this space. I think that the prices that we saw at one point might not ever return, but there's still opportunities here in the industry. And Aku being one where we develop IP and we release IP to the community, where we think we have a really strong opportunity in a window here to take advantage of some of this downturn.
Mike, on the topic of intellectual property, you recently tweeted, Hollywood is shut down, Web3 is open, Web3 has a chance to be a new medium of storytelling. This comes as a union representing over 150,000 Hollywood actors officially went on strike last week. Tell me how you envision Web3 to usher us into the future of entertainment.
Yeah, look at the way I did it. I knew nothing about Hollywood. I knew nothing about entertainment. I knew nothing about that industry, but I've been able to, for now years, generate revenue off of this character and off of this IP. And I still retain 100% ownership over this IP. And so I think this new ownership model and sharing in the upside of these our creative is very important, and that's what Web3 does. It gives us a platform and an opportunity to build an audience and build a community. You look at some of these communities that exist now, millions of followers. You look at Pudgy Penguins; they have hundreds and hundreds of thousands of followers on Instagram, and they're moving products at an extremely alarming rate. The financial kind of constraints that existed before by having dependencies on bigger organizations to output our creative that's not there anymore. But now I think Web3 can be that new medium, and I'm hoping to usher in a new wave of creatives during this tough time right now.
Any other big partnerships in the works?
You see these headphones? Check those out.
Are those Dre?
Oopsie.
Beat by Dre?
Oopsie. I don't know if you saw those.
Oh, gee.
That's a little something.
Huh. How about that? Well, all right. Come on. Say it. Don't just hold back.
There you go. I mean, you got them out. You got them. There's a very limited, but we're trying to make them go very public. So pressure's on them as well.
It's
they're cool, huh?
Yeah. So tell us a little bit about it. You drew them, and what's the story behind it?
Yeah, the idea was we wanted Aku, because he's such a creative and he's he's always doodling. He's a kid, to his personality to shine through with these designs. And so it's like, as Aku got a new pair of headphones, what would any kid do with a new blank pair of headphones? They would obviously doodle on them. So these are the Aku Beats headphones.
How many are going to be made? Are they limited edition?
There was only super limited. So there was only 13 that were made, and three of them went to the community, and I shipped those out last week. A couple others went to some of our partners and key people, and obviously I got one pair, so I got to keep it super clean.
I assume they're hand painted and not.
They're not. No, but
what?
They are. No, they're digitally painted, and then boom, they did the whole thing. The real deal. I got the box. You gotta check the box out. You got the box and all.
Wow.
Those are.
How much are they? Just asking for a friend.
These are the friends. These are just for friends. I don't know what they are.
I was going to say, Lawrence, I don't think you can buy them. There's only 13 available.
Okay, fair enough. I'm not cool.
I like where your head's at. Maybe one day.
Micah, thank you so much for joining the show this morning.
No, thank you guys.
That was Aku creator Micah Johnson. Coming up, a new survey reveals how smart money feels about the crypto space, and the results might surprise you. Those details right after this. Good morning and welcome back to First Mover. PwC is out with a new global crypto hedge fund report, and it shows the proportion of traditional hedge funds investing in crypto assets fell in the past 12 months, but the long-term outlook remains positive. Joining us now to discuss is the co-leader for PwC's FinTech Trust Services, John Oliver. Welcome to the show, John.
Thanks, Jen, and thanks, Emily and Lawrence, for having me and giving me this opportunity to talk about PwC's 5th annual crypto hedge survey, and we've done that in conjunction with CoinShares and the Alternatives Investment Management Association.
It's a pleasure to have you here with us this morning. Why don't you first talk us through some of the key takeaways? You know, the number of traditional hedge funds investing in crypto assets fell to 29%, down from 37% last year. Talk to us about what this means and what else is in the report.
Yeah, great question, and thanks for starting that way. A lot of news outlets are picking up exactly the headline that you just did, but I actually see it a bit differently. So let's start with what our report looks at. Our report looks at two populations. First, we have traditional crypto hedge funds. They were created solely for the purpose of investing in crypto assets, and then we surveyed another population of traditional hedge funds to ask them, are you invested in crypto assets? And if so, or if not, we asked some questions about that. It's that second group, traditional hedge funds, that were never created to invest in crypto, where last year we asked them, are you invested in crypto? And 37%, as you note, came back and said yes. So then you think about what's happened. We've entered crypto winter since our last survey. We've gone through the events of last summer and last fall. There's been a 65% drop in the value of Bitcoin, and yet the traditional hedge funds, 29% of them, still came back and said they're invested in crypto. On top of that, when you ask them how much are they invested in crypto, last year they had invested 4% of their assets under management, and this year it almost doubled to 7%. So while the headliner may look negative, it's actually, I think, an indication of the commitment of traditional hedge funds to the asset class.
Do you think that number might have changed since you did this? I don't know when the survey was done. It was Q1, right? And back in Q1, as you said, we had crypto winter. People were licking their wounds from the FTX debacle, catastrophe, if you will. UST was still providing a stink in the air here for a lot of people who got burned. But since then, we've seen Bitcoin particularly rally, maybe ETH, of course, rallying. The alts, maybe not so much. They have regulatory pressures. But do you think that with the majors, ETH and Bitcoin, rising as they did, that maybe some of that percentage that dropped off in the second survey might have come back into crypto, and because they don't want to miss out on another rally?
Yeah, and first of all, you have the timing right, and so we have had a bit of a bull market here in the past couple months. Hedge funds are opportunistic. That again, we have two populations: the crypto traditional hedge funds, they're going to be in no matter what. But the traditional guys, they have an option, an election to make on whether or not this is an asset class they're going to invest in. And when they see movements, they're going to move into the asset class. So yeah, I wouldn't be surprised if the percentage increased, but we don't know.
And lastly, were you surprised to see that when people respond to the survey, their perception of the industry wasn't really affected by that FTX implosion? As it was happening, I think everyone was just like predicting a mass exodus from this industry. But it sounds like from your reporting that the sentiment is still there.
Yeah. If you look at the crypto hedge funds, I think they're true evangelists, and they understand that the market dynamics are going to go through ups and downs. And some of the events obviously were pretty earth shattering this past fall. But that's to be expected with a developing technology and asset class. And so they're all in. The traditionals, as you point out, decreased a bit, but I still think that this is a inefficient new market with a lot of potential upside. And so it's the type of thing that traditional hedge funds might look to achieve higher yield. One of the things we had asked them was whether they expect to invest more in the upcoming year, and as a result of the events last year, 69% of them said they decreased the amount that they were otherwise going to invest, but they said that is stopped now. They've hit their bottom, and basically they're going to invest more. Back to Lawrence's question, it's likely they're investing more as the market starts heating up again.
All right, John, we're going to have to leave it there this morning. It was a pleasure having you on the show.
Thank you, Jen. Appreciate you having me.
That was the co-leader for PwC's FinTech Trust Services, John Oliver.
And Bitcoin is sagging. Well, you can almost say that, actually, to its lowest level since late June. Thoughts and prayers to everyone who bought at 31,000, because right now it's at 29,700 and change, whatever it is. Anyway, joining us now to discuss the crypto markets is director at crypto brokerage Caleb & Brown, Jake Boyle. Welcome, Jake.
Hey, guys. Thanks for having me.
Glad to have you on. So, Bitcoin falling below 30,000, a key level. We got a bunch of options coming up next week at the 30,000 level. Is this going to be a short-lived slump, if you will? I don't even, it's just kind of like a drift down.
Look, the movements that we're experiencing now, obviously 30,000 is a key level. We haven't fallen too much below it, but we also didn't rise that much above it. I think it's critical to note that we've had a few hype events recently, XRP with the SEC last week, a few ETFs here and there being lodged, and these headlines come, they go, then macro events transpire, and the market is still very range bound, and it's quite stagnant. I think we're not going to see any major movements for a little while until some key events become history for us.
Nonetheless, Bitcoin relative to ETH it's underperformed. ETH has overperformed Bitcoin over the past few days. You have a chart actually that shows that ratio, where that spike, that rally, if you will. And if someone can bring it up here, it's the chart of ETH versus Bitcoin. The rally, of course, shows that little pop up there. That means that Bitcoin is outperforming. ETH is outperforming Bitcoin. Explain that and why we had that little bit of a rally relative to Bitcoin.
Yeah, great question. So Ethereum's buying power has gone up quite noticeably against Bitcoin, which over the last few years, I would say has generally been more on the rare side. Bitcoin typically absorbs a lot of market dominance, particularly as bull markets start to proceed. Now, what we've seen recently is Bitcoin, which is just under half of the entire market cap of the crypto ecosystem, it started to stabilize. Ethereum is still a part of the altcoin family, if you want to call it that. And as a result of that, it's more susceptible to short-term news announcements, updates, and whatnot. Bitcoin is just Bitcoin. And I think that's a narrative that we've really run with this year. It doesn't change all that much. Ethereum is prone to upgrades. It's prone to community changes. Every other month, there will be a new project, which is the forerunner of Ethereum utility and smart contract utility. So it's subject to regular change. I think as the rest of the year proceeds, we're going to see more events where the Bitcoin and Ethereum dominance relative to one another becomes a real large talking point. We've got plenty of clients contacting us thinking, is the flippening, which was a core event of a few years ago that people were talking about, is that potentially on the cards? It's anyone's guess, but I believe the number one and number two spot for the crypto market leaders is certainly cemented.
Yeah, flippening not going to happen.
You also have another chart where you note that layer 1 protocols, Stellar and Solana, as well as layer 2 Optimism, had explosive double-digit growth following last week's XRP news. So I guess the question is why those 3 tokens specifically? Because you could see like a lot of different coins could follow that XRP news in different ways, but why those 3?
Great question. So I think, first of all, starting with Stellar, Stellar is regularly associated with XRP. So I think that's a very one-to-one movement there. If XRP pumps on the back of the SEC news, we'll see Stellar follow. With respect to other coins, I'll use Optimism as an example here. Potentially, maybe it comes down to the name, but I think the reality with cryptocurrency is investors get burnt on old projects. We see some projects whereby they pump dramatically in a bull market, they fail to deliver on their promises, and then you've got all these bag holders, as you call them, who are just down 99% on their holdings. Optimism provides something new. It hasn't experienced a dramatic bull market, and it hasn't come down 99% from its all-time high. So Arbitrum is probably another example there, GMX. The list goes on. They're coins that haven't burnt so many investors such that people are fearful of injecting capital into them.
Jake, thanks so much for joining the show this morning. We're going to have to leave it there.
Thank you, guys.
That was Caleb Brown director, Jake Boyle. That's it for First Mover. I'm Jen Sanasi. Thank you to my co-hosts, Emily Parker and Lawrence Lewitton. First Mover returns tomorrow at 9 a.m. Eastern Time. In the meantime, you can catch the hash today at noon right here on CoinDesk.com. You're watching CoinDesk TV.